What other similarities or differences do you notice in terms of getting a mortgage here in Spain?
As Americans or Canadians or non-residents of Spain can actually get a mortgage here. And you don't have to live here or work here or anything of that.
Can you name another headache that's kind of like interesting or something that isn't common maybe in the US?
But that's why all of this needs to be done before you sign, and then you can figure out how you want to deal with it. But you should always ask, show me that you have done this, because they will always try to bill you.
Hi guys, I'm Bea with Everything is Bofo, and today Paul and I are back in Valencia, and we have with us Mirelle Leguia, a licensed mortgage advisor.
Hi everyone, nice to meet you.
Yay! Thank you so much for visiting us, and we are looking forward to learning a lot more about mortgages today, which is going to be our topic. So but before we start, I'm sure everybody would love to get to know you and get to know your background.
Yeah, sure. So I moved here with my family 5 years ago, almost 5 years ago, with my husband and my 2 boys, and we moved to Mallorca. We love it here. And I have a background in business. Back in the US, I worked for corporate, Silicon Valley, but always I had a passion for real estate. And in 2017, I became an entrepreneur, and we have a couple of businesses, buying properties, flipping, all of that. So when we came to Spain and there was an opportunity for me to become a mortgage advisor, I jumped on it because I've always been interested in real estate and buying. And there's a lot of similarities, but there's a lot of differences as well. So yeah, I'm happy to talk about more how it works.
Yes, definitely. I think a lot of people from the US especially are going to be curious about how it's similar or different to get a mortgage here in Spain, or even if you can talk a little bit about the buying process here in Spain.
Okay, so the first thing to know is actually that as Americans or Canadians or non-residents of Spain can actually get a mortgage here.
Really?
And you don't have to live here or work here or anything of that sort. So you can actually request a mortgage, and there are certain parameters that you can get as a non-resident in Spain. But you can get up to 70% financing. If you buy a second property in Spain, you can get up to 60% financing. And if you want to get a commercial loan, it's also 60%. But in general, if you want to buy a house here, you can get up to 70%. And then in terms of the years, you can get 25 max. Some banks will do max of 20 as well. And then they do have a max age that will loan to. So some banks are 75 years old and some banks are 80.
I see. So you're saying, for example, if someone is 70 years old and they want a mortgage, they can only get a mortgage for
10 years.
For 10 years max, like if the bank allows 80.
Yes, if that particular bank allows 80.
Right. And what you're saying is that anybody can get a mortgage in Spain, basically, right? I mean that qualifies. Anybody that qualifies, meaning you don't have to be a resident here.
Exactly. As long as you qualify, you have enough income to be able to pay for this additional mortgage to, the debts that you already have, then yes, you can purchase here. You do need, that 30% down payment, as well as paying the taxes up front. This is one way in which it differs from the US. Property taxes in the US are paid annually. And in Spain, you have to pay for them up front. And it depends on the Comunidad Autónoma, but it can vary between 6% and 10%. And so you would add that to that 30% down payment. So it ends up being, between 36 and 40% that you need in cash in order to buy that. One other thing to point out in terms of that is that banks in Spain are very particular to in terms of wanting to see where you're getting this money from.
Right.
So it's a very common practice in the US, for example, that you can get some equity from your current property, and then you can get cash out if the property value has gone out, and then you buy another property with that. You cannot do that here.
Okay.
So you cannot get equity out of your property in the US and buy and use that for the down payment in Spain. They want to see that you get that from savings, from business. It can even be a gift if there's a letter that certifies that that's a gift, but you cannot get the equity out.
I see. So that's one way that it's different here in Spain. So say, for example, I have a property even here in Spain. I can't use that to leverage and get another, to borrow another.
No,
Yeah.
no. Yeah, that's not commonly done here. You can only get equity out of a property for basically just doing a renovation.
I see.
So if you have a property and it has gone up in value, the bank can give you that equity if you use it to do renovations and, you know, the betterment of that house.
Is it going to be from the same bank that you have that mortgage that you can get this extra money?
Yes.
Ah, okay.
Yes,
So
yes,
it kind of like, they just add to your mortgage?
It's kind of like a remortgage.
Okay.
So, you know, whatever interest rate happens at that time, that's what you're going to get. And also, you need to have had that property for at least 3 to 5 years before you can do this.
I see. Okay. So it can't just be like, oh, next year because the price has gone up, I want to renovate right away. So I have to wait a little bit.
Yeah, you have to wait a little bit, exactly. 3 to 5 years depending on the bank. And not all the banks do that. It's not a very common thing to do here.
I see. What other similarities or differences do you notice in terms of getting a mortgage here in Spain?
Well, they're a bit more restrictive in Spain on how they determine if you're qualified to get a loan. So basically, they will look at your net income, so that's after taxes, and they will look at your debts, and then they'll create this calculation called debt to income ratio. And in the US, I think they're a little bit more flex, you know, up to what percentage you can get. In Spain, they're a bit more strict about that. And then also, there's not as many mortgage products that they have. They're more creative in the US. In Spain, things are a bit more strict.
And I think I see that also in terms of the percentages that they can get, right? For a lot of people that are older, because I think there's a promo for not teens, for younger people, yeah, until the age of 30, I believe, or
it depends on the comunidad autónoma. It can be up to 40 years old, depending on where. Like in Mallorca, yeah, you can be 40 years old. Basically, there's a housing crisis in Spain, and the government wants younger people to be able to buy a house.
Yes.
And because it's so expensive, there's special mortgages for young people. Where, you know, this calculation that I was talking about can be much higher. And then there's no down payment or things like that. But you need to be a residente in order to access those. There's a list of things that the house cannot be more than 300K. I mean, it really depends where. But actually, that's a great point that you bring up in terms of residente versus non-residente, because that's... There's a difference between how you qualify for a mortgage if you're a residente or non-residente, and basically meaning that you live here or not. So for Americans that are living in Spain, usually after 1 year of paying taxes, you can qualify as a residente. However, there's a caveat there that if most of your income is coming from abroad, even if you have been here for a year and pay taxes for a year, then you banks might qualify you as a non-residente because there's that risk, you know. And in fact, a lot of banks have special rates or special conditions for people that are non-euro earners. So if you make your money outside of Spain, they actually have a list of countries and currencies that they'll work with, and some they just won't even touch. But for US earners or US dollar earners or Canadian earners, they might give you a variable rate only, or they might give you max 60%, or it really depends on the bank and on the currency. But there are differences between residente and non-residente. With residente, you can get 30 years, you can get 80%, you can get sometimes lower interest rates as well.
Right, so there really is an advantage for being a residente, considered a residente versus a non-residente. But you work mostly with non-residente, that's correct?
Yes, I work mostly with non-residente. So basically people that come here and want to buy a vacation house or an investment property, it's a great time to invest in Spain. Interest rates are great. They're around 2.5%. It really depends on the case in the bank, but for fixed rates, variable rates are lower. And if you compare that to US or Canada or other countries where it's 6% or more, it really does make sense to invest here because you're going to get a lot better returns. And a lot of people, what they do is if they want to buy a property and just come a few times a year, they can apply for a touristic license, or they can rent it long-term or short-term. There's a lot of ways to do it, and a lot of our clients actually come here to invest, and it's a really good deal.
So you're saying, like, for example, if they do get the touristic license, and I think I covered this in a previous video that we had with the property developer, is that you can clear that week for you to come and visit. So you'll have a place to stay, and the rest of the time you can still rent it out, right?
Yeah, if you have a touristic license, you can set your own calendar and decide, these are the weeks that we want to do it. I'll give you an example. I have a client who is buying an amazing apartment close to Marbella, and I think the price was $900,000, but that apartment already has a touristic license, and they're already renting it out, and I think they're getting maybe like $70,000 per year in rentals, and that includes some free weeks that he can use on his own. So with the amount that he's getting on rental payments, he pays for the mortgage, and he makes money too.
Yeah, so he pockets the rest.
Exactly.
Basically.
So it's half of it he pays for the mortgage, and the other half he pockets. Yeah.
That's so nice. So what would be the process for someone who's a non-resident, especially if someone who doesn't live here at all? Because, like you mentioned, someone could be on a non-lucrative visa already here, but still be considered a non-residente. So if someone doesn't live here yet, but wants to invest, maybe buy a property for his own use or for rental, what would be the first thing they need to do?
I tell my clients that the earlier that they get a pre-approval, the better. Because the way that the buying process works in Spain is that if you like a property and you want to reserve or you want to show that you want to buy it, there's this Contrato de Arras where you pay 10% down to reserve that place, and then in the meantime you go get your mortgage and you do all the due diligence, etc. In Spain, not qualifying for financing does not get you out of that.
Ooh, okay.
So you can lose that 10%. Usually it's 10% that you put down. You can lose that 10% if you don't get that. And so I say, okay, you want to go look at houses, fine, do all that. Once you find something, or when you have an idea of the range of price that you're looking at, come to us, then we'll have a conversation. Fill out a form. We have a form where you input all your finances. It's like 10 minutes probably takes. And then we can take a look at that, and then we'll let you know, yes, you would qualify for this number or not. And then we can have a conversation and see what's the best way to position this, so that you know also what price range to look at.
Right.
We actually have a 98% approval rate because we do the work beforehand and we look at your finances, so we can tell, like, okay, yes, this is how much you would qualify, this is how much. Do you have the cash? Do you not? And then we'll talk about that process. Let's say that you come and then we go over this. Then I will send you then you sign up to work with us. And then I'll send you a list of all the paperwork that we will need for the bank. If you are a salaried worker, like if you work for a company, we'll need passports. Eventually we'll need a NIE, and this is something that the lawyer can help with.
Okay.
We'll need tax returns for the last 2 years, payslips, bank statements, credit reports.
Okay. So American credit report.
American credit reports,
Right,
yeah. I'll actually.
I don't know if Canada has credit reports.
Every country has.
Okay.
Every country has their own, and we have a list, the name of the country, and which credit reports we accept.
So even if they don't have a credit report here in Spain, they can present the one from their own country.
Exactly. They have to present the one from their own country. If they are already living in Spain, they have to present both. Okay. Yeah. And the banks will find out everything that you have, that you've done. So we ask for all that. If you already own a property in your own country, then we'll ask, for your mortgage statements, that you've been paying that, etc. If you have your own business, then in addition to that, we'll also require a business P&L, 6 months of bank statements, and a letter from your accountant certifying that this is your business and it has been in business for X amount of years. Usually when you are autónomo or you have your own business, the bank wants to see that you've had at least 2 years with that business. And if you actually work for another company, that you have at least 2 years of work and at least 1 year that you've worked at the same business. So not a good idea to change jobs right before you're applying for a mortgage.
I see. Yeah. Which I think is the same in the States as well, right?
Exactly.
Like don't make a lot of movements with your credit your credit report or something. Like don't sign up for a new credit card, don't close a credit card, nothing. Yeah.
You know, buying a new car, that's going to decrease the amount that you qualify for, you know. So don't get a lot of debt basically right before that. And that happens sometimes, you know. So yes, I advise that wait to do that after you've been approved and you've got your mortgage going on. Yeah. So other than that, once you send us all the paperwork, we'll prepare a file for each client, and then we will send that file and introduce the client to the bank. The way that we do that is we work with more than 30 banks, and each bank has their own requirements, their own interest rates, their own, you know, somebody will give you a 20-year loan, somebody will give you 25, etc. And so we sort of look at the client's profile and decide, okay, what is the best possibility, which bank, which conditions, you know, that you check everything there, and then we'll propose, we'll sell that client to the bank that fits their profile the best. Usually banks take about 2 weeks to give us a pre-approval, and in that time you could be, you know, finding your apartment or finding your specific property, and then when everything is ready and you're set on that, then we do a valuation. So we send somebody to, and we help with that as well. Basically, someone goes to the house and makes sure that the value is the same that you're going to pay, because the bank will give you up to 70% of either the purchase price or the value of the house, and that comes from the valuation. So it's very important that it doesn't come too low. And then after that, then they send all of that to the bank's risk department, which takes a couple of weeks to give final approval. If they don't come back saying like, oh, we actually need this to prove that, or more paperwork. So, but we'll be the point of contact, and, you know, we'll facilitate all of the conversation with the client. After the risk department approves, they create this paper called the FAIN. You get the FAIN, and by law, there's a cool-off period of 10 days before you can go to the notary and sign.
Okay.
So you can change your mind, you know, in that 10-day period before you actually sign for that. And yeah, then you go to the notary, sign for everything. And in the meantime, you know, you've opened a bank account with the bank. You can do this from abroad. Your lawyer can do a lot of that with the power of attorney. So a lot of what's going on we can do during the same time, and then you're ready to come and sign.
Okay, so you don't even have to physically be there for the first few.
No.
As long as
for the whole thing.
Yeah.
I mean, I would recommend that you come see
yes.
the property on your own.
Absolutely.
But if you have someone trusted that, you know, and you have some, you know, selected a property, then the rest of the process can be done from abroad.
Right. So like someone, like you said, a trusted friend, or that can look at the property and all that.
Exactly.
And then Mirelle, you mentioned a lawyer. Do you think that it's important to have a property lawyer when you're buying a property?
Yes, a real estate lawyer is definitely super important, especially if you are a foreign buyer, because property lawyers in Spain do a lot of due diligence that needs to be done. They usually charge about 1% of the price of the property, and if you don't have a trusted one, we can also help and refer one. And basically, they're looking at some key paperwork. They're going to look at the nota simple. And for that, they want to make sure that everything is legal, the status of the property is legal. They're going to look at the registro de la propiedad to make sure that the name of the seller is actually the owner. They're going to look at the cédula de habitabilidad, basically making sure that this property is apt for living. And they're going to look at the certificado energético, which is now mandatory in order to sell property in Spain.
What is that?
The certificate of energy.
Oh, so like how much it consumes?
Yes, exactly.
Oh, the one I always see on Idealista.
Exactly.
Okay.
That's why it's there.
Oh, I
Yes,
see.
yes,
So
yes.
that's mandatory.
Yes, because eventually the government basically wants all of the houses to be energy efficient.
Right.
And so all of the appliances that you get and all of that. So eventually there will be a point where you won't be able to sell if it's below a certain point.
So, and that could also mean, for example, insulation. Is that correct or no? Or
No.
more just like energy efficient appliances?
Yeah, exactly.
Okay.
And lighting and all of that.
I see. Okay.
Yeah.
So it can't be incandescent bulbs.
And finally, they're going to look, if it's an apartment and it's within a community, they're going to look at the bylaws and make sure that there's no debts, unpaid, anything. So there's a lot of work that they do. Make sure that the property that you're buying doesn't have any surprises coming out later. It's 1%, but you end up saving a lot of money by doing all of this due diligence before you actually sign.
And headache, right? You're saving yourself from headaches. Yeah.
Exactly. I mean, it depends on the region that you're buying, but for example, in Mallorca, there's a lot of rustic fincas, and they're not certified for living, and you can get into a lot of issues with that. So you definitely want to work with a lawyer.
And I think also like with fincas, so fincas are like small houses, right? Rustic, rural houses. And sometimes like these houses, they don't exist. Like it's not recorded in the city hall or something. Somebody just built it in the middle of nowhere. And
yes, there's a lot of those, and they're not. They don't have a permit to live there.
Right.
In Mallorca and many areas of Spain, rural areas are not approved for living, but people still built. They built a house on that, and so you want to make sure that the lawyer looks at all of this and that you know what you're getting into before you purchase, because there can be a lot of headache. Yeah.
Can you name another headache that's kind of like interesting, or something that isn't common maybe in the US, but is like somewhat common here?
Yes. One thing is that there's no inspection here.
That's what I was going to ask you. Yes. Yeah.
There's no, the process is different. When you go in the US, you do an inspection, make sure that there's nothing happening to the house, that there's nothing wrong with it. That's not very common in Spain. However, the owner does sign documents that talk about, how everything works inside of the house. And that it's free of hidden defects or things like that. And there's also a clause that is called vicios ocultos, which is basically if you move into that house and within 6 months of that, there's some major issues or something is not working that was not declared, then you have the right to claim either them to fix it or for them to compensate you for it.
I see.
So that's sort of the way to work that.
So for the US, it's more of an inspection before the fact, and the Spain is more of after the fact.
Yeah, I mean, you try to walk through and ask all the questions that you can beforehand, but there is this protection of 6 months. Of course, we need to prove, there's a burden of proof that this defect
was already there.
Yeah. And it didn't happen the second day that you moved and things like that. But yeah, basically.
And is that also something that a lawyer can help you with? I mean,
yes,
they know what to look for in terms of, I mean, not the whole thing, but...
Yes. I mean, they're not a real estate agent and they're not an inspector, but they have worked through enough cases where they know what to look for. And so they can smell things, and they can warn you about it, and they can ask. And then they can also help you draft that contract to include certain things in it.
I see. So like the owner should like do this. For example, they saw something that's like broken or something like that. Yeah, like repair a window.
Yes,
or
exactly.
Window,
you can put in the contract and you can specify if you wanted that fixed before you buy, or if there's a period of time. You can negotiate all that with the owner.
And then the lawyer also can get you that that number that you said, right? Like the NIE number.
Yeah, exactly. That's something else that the lawyer can work with you on. They can get you the NIE because the bank will need that. If you give them a power of attorney, they can also open the bank account for you. They can basically act legally as you while you're here and get all of that done. Yeah.
Okay, so yes to lawyer.
Yes, for sure.
Well, I have an additional question for the headaches. Because, so for example, I remember we went to this house in Castellon and they have like an extra space that they added to the house, but it infringed on it went over the property line, and I think it's the neighbor's property line.
No, it's not that. That's not what happened.
Oh, that's not what happened?
No.
But that happens.
Yeah.
Right.
That happens. So the lawyer looks at the catastro to make sure that the property is within the guidelines, that there's nothing, that there's no neighbors complaining that you're on them. All of that is the part of the due diligence that the lawyer does to make sure that everything is square. Yeah.
Well, my question is, if I'm the owner and I did that, like an extra room or whatever, how hard is it for me to, like, what are the repercussions for me as a seller? Like, for sure, I know it's not going to get approved, like, right? If it's, again, yeah.
Yeah. Well, there's a few, we're getting more into like, building and all of that, but there's some rules depending on what you have done. For example, in Mallorca, the pool issue, like you built a pool, but you didn't get a permit. But if it's been so many years that you had it and they didn't tell you to take it away, then you may keep it. However, you may not change it. So you can update it, but they can't ask you to take it away after so many years. So all of that needs to be shown. The lawyer needs to do their job, and then they show you and they tell you. And if you as a buyer are okay with that and you sign knowing all of this, then that's your problem. But that's why all of this needs to be done before you sign, and then you can figure out how you want to deal with it.
Can you explain a little bit about the Contrato de Arras? So you mentioned that it's 10%. That's considered like the down payment. Is that part of the down payment to the seller, or like earnest money?
Yeah,
right?
exactly. It's like the earnest money. They will deduct that from the down payment part. So you don't have to pay 30% on top of that. You'll pay the 20% rest.
Later on.
Yeah, exactly. Yes, so when you signal that you want this house, you sign this contract and you pay 10% down. Like I mentioned, you cannot back out of it if you don't get financing. Mm-hmm. So it's very important that you have that squared away. It's pretty tight. So if for any reason you back out, you lose that money.
10%.
But if the seller decides to back out, then they actually have to pay you your 10% back plus another 10% from their end. So double that 10%.
Yeah, because they first agreed to it, and then now they're the ones backing out,
Exactly.
right? Yeah.
Exactly. So it rarely happens.
No one wants to. Yeah.
Exactly. Yeah.
Can I just like, I hope they say no.
Exactly.
Okay. So that's pretty much like once that Contrato de Arras is there, it's almost like a done deal, right? At that point.
Yeah. I mean, if you're willing to lose that 10%, then you can back out of that. Mm-hmm. But, that does show that you're very interested and you want to go forward. Now, when you sign that, you usually set a date to close. And sometimes it takes longer. Mm-hmm. For example, if it's a complicated mortgage and the bank requires more time, mm-hmm. then you might not be ready for that date. So you always want to put a far enough date that will give you enough time. The mortgage process takes around 8 to 10 weeks. So I recommend that you never sign a Contrato de Arras and then say, okay, we're going to be at the notary in 3 weeks. You need at least 8 to 10 weeks.
8 to 10 weeks is a safe time. Okay,
exactly.
Yeah. Mm-hmm. And does that count also, like if I need paperwork from the US that I need to get, and that takes a week to get, so that's part of that 8 to 10 weeks, that kind of estimate, right?
Yes. I would say minimum 8 weeks. But most of the paperwork that the bank needs is digital, and
you can get it.
Yeah. And most banks. So we work with teams within the banks that have people that speak English, and When you get into translations and all of that, then the process can be delayed.
Right.
So what we usually do in those cases is we switch banks.
Okay.
I'll give you an example. I had a Polish client and he had his own business. So, it adds a little bit more complexity. He's sending me all of their tax returns, all of their P&Ls, all of their stuff. And I propose it to the bank. They say yes. I send all the paperwork and they come back saying, I need this sworn translation of all of these documents.
From Polish to Spanish.
Exactly.
Yeah.
Sworn translation.
Right.
So basically we switched and we went with another bank that has like an automated translation and, do the process like that. So, that's one of the benefits of working with a broker, of not having to go start the whole process again with somebody else, but English, usually most of them do. And the paperwork you can just send.
I see.
Electronically.
And then, is there escrow in Spain the same as in the US? You know how when you buy something, usually it gets put in escrow?
Not per se. There's no escrow, but usually when you give the arras, usually the lawyer can set up an account where they go to so that they don't have to go directly to the owner. Sometimes they do, but it really depends on each client. But in order to be more safe, the lawyer can set up something so that you don't. But it's not an escrow per se like in the US.
I see. So it's like a bank account for that Contrato de Arras.
Sometimes it's under the lawyer's firm
I see.
that you put in that money, and then once all the steps have been checked, then he releases that money.
I see. Okay. So it doesn't just go directly to the seller.
It can.
But you would prefer that it's
Exactly.
somewhere in the middle.
Exactly.
I see.
For
Okay.
more safety, yes.
And then can we talk a little bit about refinancing? Is that also a common thing here in Spain?
It's not as common as in the US. It definitely can be done. Usually for people that have a variable interest rate and they want to switch to fixed because maybe it increased too much. So basically, what you do is you refinance the amount that you owe to get new terms in terms of interest rate or years, for example. For example, if you bought as a non-resident and eventually you became a resident and you wanted to get, better terms and conditions, you can do that. However, when you do that, you're not getting money out unless it's for a reforma. So you're not getting equity back. So you can do refinancing to get those better terms.
Just the better terms, yeah.
However, if you are switching banks, let's say, there is a penalty for early repayment.
Oh, okay.
Yes. That's something else that differs from the US. So basically in Spain, if you have a fixed rate loan and you decide to sell it or to refinance it or anything else, basically stop your mortgage, you have to pay a penalty. It's usually 2% for a fixed rate mortgage of the amount that you have at that point.
Okay.
In the first 10 years. If you do it after those 10 years, it goes down to 1.5. If you have a variable rate, it's 0.5%. And after 3 to 5 years, it goes out. However, it's not, it's up to 2% amount. So some banks might charge you, but you as a customer have the right to ask from the bank and say, hey, I'm only going to pay you if you actually did incur a cost. And let's say that the interest rates went down from what you had, and now the bank is going to make less money to the next person that is requesting a mortgage with the money that they lent you. Then they have to show you that they lost that amount. You can ask that as a customer when they're charging you. Okay, I want to see exactly. And they have to provide that to you, and they have to prove that they had this loss before you have to pay.
And you pay the exact amount of that loss?
Up to 2%.
Up to 2%. Okay, got it. Okay.
Yeah.
So it's kind of like you actually get a penalty for paying early, right? That's even if it's you that's paying early, or
Yes.
okay.
Yes, because basically banks get charged this from the Bank of Spain. So they're protecting themselves because they might have to pay for this penalty. So yeah, that's basically how it works.
Just passing it on to you. Yeah, I see. Okay. So it's quite different from the US where if you pay off early, there's no penalty, right? You're actually lowering your interests when you're paying more towards the principal and paying early, correct?
Yeah, but what I mean by paying early is like you know, let's say you have the 20-year loan, and at year 10 you're like, okay, I'm done paying for this and I pay for the rest. And so that's called an early payment, not necessarily like making additional payments to reduce your,
I see.
Yeah, it's
Okay.
just basically you paid off and you no longer have a mortgage.
Okay, and that incurs a penalty?
Yes.
Okay.
But if you're just adding more to the mortgage, it's okay. So, for example, like
If you refinance or...
Oh no, I mean if your mortgage is like 2,500 a month, you add 2,700 or something.
You pay 2,700
That's
every
you
month.
get
Oh,
penalties.
you pay
still?
more. Maybe if that means
end,
that you
right?
pay 5 less years, then, you know, at that point, yeah.
And that's what you mean too when you say that some other bank, so when you refinance, meaning like whatever, like say I owe 200,000, then I want to refinance that with a different bank. So that means that bank is paying this bank 200,000, and then I'm owing with a different bank, right? Like I'm getting a mortgage with a different bank, right?
And the bank's
So-
gonna charge you the penalty that they're gonna incur because they're paying it off, right?
The first bank.
Yes.
Okay, got it.
But you should always ask, show me that you have done this, because they will always try to bill you.
Right.
But you can see, okay, this is that much, then you have a period to review, and then, you know.
Okay. So, and you're saying that the bank is losing money because they got paid off early and they lost those interests, basically, right? Okay.
Yeah. If the market at that point, they're going to make less money with the other loan, then that's why they're charging you. Because, you know, when you got a mortgage, basically they make their calculations and they say, I'm going to get X amount of money from this customer throughout this lifetime of the loan. And all of a sudden you decide, you know, and they make the interest calculations based on that and how much money they're going to make. And then 5 years into it, you pay it off. Then, you know, I'm not making the money that I was going to, so I'm going to charge you. Yeah.
Wow.
Okay, so in my notes, I have this question about for non-residents: is it better to have fixed or variable?
So we have 3 types of interest rate for loans. One is fixed, which means that you're going to pay the same for the duration of the loan. Variable rate, which is fixed for the first year, so that you know what the first year will entail, and then thereafter it would be Euribor plus a percentage that the bank sets, and Euribor is the standardized European rate that the Central Bank of Europe sets, and then we have the mixed rate, which is a combination. So you can get 3 or 5 years of fixed, and then the rest will be variable. And it really doesn't depend whether you're resident or non-resident. It really depends on how risk averse you are, what you're planning to do with the property, if you're planning to repair early, if you're planning for this to be, let's say, your home that you will keep for the next 30 years and you want that peace of mind and you're risk averse, then yes, get a fixed rate loan. If you're not sure what you're going to do with that, you know, or you might want it, but you know that in 5 years you're not going to have it, then maybe get a mixed rate loan, because, you know, you might get a better interest rate with that. And then if you are, you know, risk prone and you want to take a risk and you want the cheapest possible, then go ahead and do the variable.
So the variable really has a little bit more risk because it, like, how high can the Euribor go, for example, historically?
I mean, you know, it varies, but I mean, we're living in weird times, you know.
Right.
There's wars happening all the time. You never know what's going to happen. So if that makes you anxious, then don't do that.
Yeah, just go in the fixed.
Yeah, or mixed, or, you know, yeah, exactly. But, you know, if you know, for example, like the repayment, you know for sure that you're going to repay this in 5 years, and I've had clients who have that, then they go for this.
For the variable, you mean? Yeah, because then the penalty is so small. It's 0.5%.
Exactly.
Yeah,
Exactly.
makes sense.
And then so for for the mortgage, it's always going to be in euros, no matter if your income is foreign.
No, in euros. Okay. Yeah, yeah. When we do all the calculations of your income, all of that we translate into euros. Yeah, and you know, the whole currency exchange is a risk for the bank, and that's why sometimes they have different terms for non-euro earners, because there's always that risk.
Is that the reason why some countries do not qualify for these banks, and and then only qualify for a smaller number of banks?
Yes, yes, it's because of the risk and the currency devaluation, and so banks will say, I will work with these currencies, but I won't work with these other ones. And the Filipino peso happens to be one bank that works with them.
Very good. Yeah. So you have one bank that works with the Philippines.
There is an
Yes.
option.
Yes.
There is an option. Perfect, most of them do accept US dollars. Some of them will do Mexican pesos, for example. Some of them won't. So it really varies. But I mean, for the more known currencies in the world, most banks do.
Can someone with a property in the US, for example, can they refinance their house there and use those funds as like down payment for buying a property here in Spain?
No. The banks in Spain are very strict about where the funds are coming from for your down payment, and that's not, because that's considered like a debt, you know, like you're already using your property and the value that you have there to buy something else here. So no, you can only buy it from savings or from a gift, or from your business savings, or what you get paid to do that. You cannot use equity release from the US to buy a house down payment here.
So can I use rental income from the property I'm buying as part of the income qualification?
No, you can only use, eventually, I guess is the better answer. So if you're buying a property, the bank wants to see that you will be able to pay for that with the income that you have now,
Right now.
and in the past 2 years, not future income. But let's say that you buy this property and you rent it out, and within the next 2 years you want to buy another property and rent it out. The bank will consider the rental income that you're getting from that property in the last years. If you can prove that you get paid every month and that it's recurrent, and that it has been happening for a while, 2 years, then they will count that rental income. They won't count it as 100%. Just like like your salary, but they will count 70% of rental income towards your net income, basically.
So what qualifies as income when you are applying for a mortgage? What are they looking for?
They're basically looking for steady income. Like I mentioned before, that you have been at the job that you're at for at least 1 year, and in total at least 2 or more years. And what qualifies as income is, if you work for a company, then your paycheck, basically your monthly paycheck. If you have rental income, that also counts, although it doesn't count 100%, it counts as 70%, 75% for some banks. If you have business income or your bonus, for example, that also counts at around 70%, and that needs to also happen every year. It's not like, last year I got a bonus, so I'm going to count. No, you need to have it to be consistent and around the same. So get it every year and around the same range. It doesn't have to be the same. Obviously, nobody gets a bonus that it's the same every year, but in order for it to count, and it also counts at 70 to 75%, it needs to happen very often. And same with rental. And if you have investment income, the only investment income that counts is the one that you get out. So a lot of people come and say, I have this investment account and I made all this money. Yeah, but did you take that out? Because otherwise it's just there. Mm-hmm. So you didn't really receive it as income.
Got it. So that means that it's actually something that you have to take out and put in your bank account.
Yes.
Yeah.
Yes.
Okay.
Yes. And then, of course, all of that needs to be shown in your tax returns. Because if you tell us that you got this income, but you never got it and you didn't declare it, then we have a problem.
Then that's not income at all.
Exactly. Exactly.
Got it. Okay. And then, so what if it's like not steady income, for example? what would happen if someone, has more income one month and then the next month not too much?
That's fine. And this is where it's important that we work with you and understand your financial situation so that when we go to the bank, we can tell them your story. So, for example, especially if you own a business, you're not going to make the same every month. And that's fine. But we also want to see the story of, okay, well, this month, you can say, like, if you have this type of business where it's seasonal,
right,
then, we want to see that on those months, but you make it up in that, in the Christmas season or, whatever it is. We want to explain that beforehand to the bank so that when they look at it, they understand what's going on and they're like, okay, yeah, that's fine. Same if you are a business owner and let's say last year, you were making 100K and this year you made 200K and you want us to go off of that 200K for your income. The bank will ask, like, what happened there? How did you get that? And then we need to be prepared. So we have these conversations before we present your profile to the bank. And you can say, you know what, I signed 2 new clients and they've signed a 10-year contract or a 5-year contract. And then we can include that in your file. And then when I go to the bank, I can say, hey, you will see that this year is 100% increase because this is what it is. And these are the contracts. And we can preemptively tell them about it so that they will consider it.
So you work with all kinds of properties that are being sold, right, and bought. So typically there's a lot of old properties, but what about new construction? So I also see that a lot, and I know that there's a little bit of a difference in the process. Yeah.
Yes. So for new construction, basically, is when you buy before the project is done and it's a new house. And usually what we do is the start of the process is the same. You get a pre-approval and then you have to wait for, to get the house finish the construction.
Yeah.
So the bank can't give you the loan until it's done and the valuation is done as well. So during that time you wait. And the thing is, once you get an offer from the bank, once you get that that is only valid for up to 2 or 3 months. So, sometimes construction takes more than a year. It depends at what point you purchase. So basically what happens is you are pre-approved, but then 2 or 3 months before it's estimated that it will be completed, then we have to submit paperwork again. The bank wants to see that nothing has changed. You haven't bought another entire house or a new car or something else in that time. And then so they will ask for updated bank accounts and updated credit report and all of that, just to make sure that everything is as it was. And then they will give you the final approval again, and then you can sign.
I see. But it's not necessarily like starting from scratch, right?
Exactly.
Okay. It's just showing that everything is consistent.
Yeah, it's less paperwork, but they still need to reevaluate you.
I see. And then when will the valuation happen then? Because it's not until the property is done. Is that correct?
Yeah, exactly. Yeah, once it's finished construction, then they can actually assign it a value. Before it's done, they can't.
I see. But is it easier then to have a valuation of a new construction versus like if I was to buy an older building, or not older building, an older apartment? Because there might be things that are wrong with it already.
Yeah, I mean, in terms of the buyer, if it's new construction, then yes, there's obviously less things that will go wrong because it's new. But in terms of the valuation basically assigns, okay, this house is worth this much, and it's based on things beyond what's inside of the house, but where it's located, how big it is, all of those things that will take into consideration.
So it's not just what's in the house, like what you said, like, so location matters.
Yeah, location, size,
proximity to areas, maybe like proximity to a metro or a school or a grocery.
Yeah. So they have within the neighborhoods, they have a sign like, okay, this area is worth X many euros per square foot, and this house is 100 square feet. So this is roughly, and then they can go up and down from that depending on the state of the property.
I see.
Oh, this house has a pool, it's valued more, and but that's roughly how they do it.
Got it. So say for example, there's no house yet and you want to create your own, like construct your own. So can you also like mortgage just land, and how does that work?
Typically, no. You would have to buy the land on your own with cash, and then the bank can finance either just the construction part, and there's some banks that will add the cost of the land plus of the construction and can give you 60 to 70% of the total value of the project, basically. But initially, you have to buy the land from your own cash, out of pocket. And then the process, there's a lot more people coming from those types of mortgages nowadays because especially people that want to build through pre-built homes. Like either container or, pre-built somewhere and just transport it here, which cuts the construction for like a year or something like that. So we're seeing more and more of those loans. It's more difficult, and there's a lot more, the process is longer because when the bank releases the money, as it gets built and as you reach completion levels, let's say, they will release more funds, but you have to have a valuation at that point and then show everything that you have done in order to get more, and then so on and so forth until it's done.
So it's like in stages. The money comes out in stages. Exactly. I see. Right. So they have to do a good job, the construction people.
Yeah. I mean, at first, you can get a percentage of what you paid for the land to get that going. Okay. And then you have to present an architect plan and the permits and all of that. And then, as you reach, those levels, then you present that to the bank releases funds. So, if you want to do something like that, you need to have some cash up front to, as a buffer.
Right. Otherwise, if nothing gets done, then nothing gets released.
Exactly.
So I have a question here. Should the borrower get life insurance? So in case of death or long-term disability of one or more borrowers, it pays off the loan.
Yes. In fact, in most cases, the bank requires you to have life insurance. And since we're talking about insurance, basically, banks will offer other products when you get a mortgage. And that includes life insurance, health insurance, house insurance. And they will give you a discount in the interest rate if you get it through them. So if you're going to get house insurance anyway because you wanted to, or if you're going to get health insurance, especially as an American coming here, you need to get it. It does pay off to do it through the bank because you're going to get a discount in your interest rate.
So each bundle that you add makes it lower and lower.
Yes. And it depends on the bank and it depends how much, but it can be between 0.1% to 0.25% for each thing. Ooh. And some banks offer 4 different things. Some banks offer 1 or 2. It really depends. But when we give you a quote, we'll tell you all about that. Like, okay, this is the rate, but if you get this is how much you get. I don't know how much exactly that monthly fee will be for this insurance because it depends on your health or your age and all of these things. But when the bank pre-approves, they will send a document with all the information, and then you'll know exactly how much.
Okay, so it's worth it to go with a bank that offers a lot of products, basically.
Well, sometimes banks don't offer a lot of products, but they have very interesting interest rates. Okay. And others have higher, but if you buy all that, it goes down to that. And then it also varies on the size of the loan. For example, if you get a bigger loan, usually you have lower interest rates. Right. So it depends on a variety of things.
I see. Okay. So basically, it's good to have all these options laid out, right?
Yeah. And basically, that's the work that we do. So, we talk to you about, okay, this is my situation. These are my earnings. This is what I'm looking for. This is the size of loan I want. This is if I want variable or fixed, how many years. All of that we take into consideration, and then we decide, okay, what would be the best option for this person? Instead of you having to go to 30 different banks and get a quote for this and that, then we do basically that work for you. And then we say, okay, these are the top 2 banks that fit all of these customers' requirements with the best interest rates for this person. And then we go ahead and then apply to those.
And then you might have mentioned this already, but what is your approval rate for when you have a client and you present them to the banks?
Yeah, our approval rate is 98.2%. That's because we do the work beforehand. So we do the evaluation and we talk to the clients and, basically get all of this before sending them to the bank so that we know if this is going to work or not. We're not going to just take any client and then send. And charge them and send. Once we tell you, okay, yes, you are qualified, then that's when we say, if you want to work with us, that's when we charge our fees, and that's when we start the process, knowing already that it's very likely that you'll get approved.
Before we talk about fees, because you mentioned that, I want to ask then, you will kind of give this client or this potential client a sort of computation of like, okay, well, this is how much money you have saved up. You will probably most likely get approved for this amount, right? Yes. Okay.
Yes, exactly. So when we send you a quote, first of all, we ask you to fill out our online form, and then we will evaluate that. We'll put it on a spreadsheet that we have, and we'll make all the calculations, and then we send you a quote saying, okay, this is the max that you can qualify for. Or if you already saw a house and you told me, I want 500K, then I'll, run the numbers based on that. But this is how much you qualify for. This is the max term. These are the interest rates. If you want to get fixed, if you want to get variable, these are the different things. This is roughly how much you'll need in cash to be able to close. That includes the down payment. That includes the taxes, and then other costs, associated costs like some notary costs, the lawyers, our fees, and all of that, so that you actually have a good idea of how much cash do I need now in order to buy this house. And we provide you a calculation of what your mortgage would be.
I see.
As well.
Okay, and this is even before you present them to the banks. Like
Yes.
the client already knows,
Yes.
has a great picture of.
Yes, that's we present that to you, and then you decide, yes, I want to go forward, or I don't want to go forward, and that's when we start the process.
I see. And what else? What else are the benefits of having a mortgage broker as opposed to like, oh, I have a good relationship with my bank already, and I can get this mortgage rate?
Yeah, I mean, you can always go to your bank. In fact, if you already have a relationship with your bank, we can't come to the bank and say, hey, I present to you this client because they're already your client. But yeah, we work with 30 banks, and they might not all be the best option for you. And so we have already done the work of, okay, this bank has this interest rate, this is what they require, and then we do the sorting and deciding of, okay, what would be the best option for you, and we present to you the best options, the best two options. Also, a lot of times we get clients that have certain particular circumstances that need to be evaluated, so we advise on what would be the best way to achieve that. For example, if age is an issue, or currency, those are things that we work out with those clients. So basically working with a broker will save you time, money, and headaches.
Right.
Especially for clients that come from abroad that, maybe some of them speak Spanish, but maybe they don't. I mean, I can tell you when I first moved here, I tried to buy a house without a mortgage, and it was an ordeal, going through each individual bank, seeing what their offer is, waiting for them to ask you for paperwork. They don't understand what that means. The teams that we work with within the banks, they work only with their international clients, and they know what a W-2 looks like. They know what a tax return from the US looks like. And so that speeds up the process. And you don't have to go knock on all these bank doors that, this is the best bank for you. Let's get the best deal. Yeah, we also advise, for example, talking to a client, like if you add someone to co-sign with you, then you can get, to the amount that you were requesting. Like, maybe some young people, their parents can co-sign with them so that they can get to that amount. And then we also save you a lot of money because we bring banks a lot of business and we have negotiated rates with them. And a lot of times they're cheaper than if you went to talk to them directly. I'll give you an example. I had this client who bought an apartment in Malaga, and his business partner was like, oh, I want to buy one too. So he went directly to the bank, and the bank quote them an interest rate that was higher than his friend had paid, and they're business partners, so they get 50-50. A lot of the financials were the same, like basically everything was the same, and they were like, why am I getting a higher rate? And the bank told them, well, if you want to go through them, then you can get it. So they came through us and they got a discount. So that pays for our fees and for more, because we're talking about a 30-year product and you can save up to 1% in interest rates. So that's definitely a big one.
Okay, so even if they're paying you, they can actually get it cheaper because of your connections with these banks.
Yeah, exactly.
Nice. So what are your fees?
So we have two fees that we charge clients. The first one is an admin fee, and that is $9.95. And you pay that after we provide you the quote and all of the options, and you decide to work with us.
I see.
Then you pay the admin fee, sign the terms and conditions, and then we start the process. If you don't get pre-approval, we refund that money.
I see.
So yeah, you don't run any risk, given that all the information that you gave us is true.
Right, yeah, you can't just fib your way and then...
Exactly. You can say like, oh, I have this, and then we find out that actually you earn half of that. Well, I wouldn't have qualified you. But yes, so that's the first fee. And then after the bank gives approval, we charge a second fee, and which varies, but it's around 0.75% of the mortgage amount.
I see.
And that's due once the bank gives final approval.
I see. So that's when the bank has already said, this is how much money I'm giving you, like 500,000, then you get 0.75 of that.
Yeah, exactly. When the bank says you're approved, let's move to the next stage, sign. Okay, that's when exactly.
And that 0.75%, if I'm a buyer, I have to pay that out in cash, or can I take that from the borrowed loan?
No. You have to pay that in cash.
Okay, so good to know.
Yeah, basically the bank will not let you roll in anything like taxes or
it just goes
lawyer
to the property,
or all of the
seller.
fees. Yeah, exactly. But they do create a sheet basically of all the costs of buying. And they will ask us, how much have they paid, so that they put that there. And then when you do your taxes, then you have, okay, these are all costs related to buying, and then you can deduce some of that.
Oh, okay. So you can take out some of that.
Yeah, that's or like let's say you want to sell the house later, and you're trying to calculate, what the capital gains were. Let's say that you buy a house for 500, and then you do some work, and then 3 years later you want to sell it, and you sell for $1 million. Then when you calculate the cost of purchasing the house, the fees that you paid us come in there, so you can reduce that.
Okay.
So also, what is the difference between the ITP, the ITP, and the IVA, and how do I know which one applies to my purchase?
Yes. So ITP is charged when you buy a second-hand property, and IVA is charged when it's a new construction. So, and it depends which community you're buying it in. So Madrid, I believe, is 6% for ITP. Balearics is more like 9-10%. Some of the areas have kind of a progressive rate, so up to this much, you get 9%, and, can go up to 13% if you're buying like multi-million euro properties. But yeah, I would say it usually between 6 and 10% for ITP. And if you're buying new construction, it's always 10.
And that's something that you can tell the buyer when they're talking to you initially,
Yeah,
right?
that's exactly when we do the quote, then we'll tell you, okay, this is the ITP or this is the IVA, so that you have all of your numbers like, okay, I need this much cash in order to close. And in fact, we also do it because the bank is going to ask, okay, it says here that you're going to need 200K to close this transaction. I want to see where you have this. And they will ask for bank, like savings accounts, statements, or if you have it in investments, they're going to ask for investment account statements and all of that, so that they can see that you have this in cash. If you don't, and your Aunt Lydia is giving you the money, then you need to have a letter from her saying this is how much I have. Also, if you have it in investment accounts, then we need to tell the bank, or you need to write a letter to the bank saying, I have this money invested. I am planning to sell it if this deal goes through.
I see. Okay, so there is that promise that you have to take out that money.
Yeah, because they need to be able to see that you have it to close. Otherwise, you won't be able to close.
I see. So you mentioned that you have a 98% success rate. So for the 2%, what would be your tips to make them be approved, right? Like what would be the tips, what would be the things that people didn't do correctly that they have to correct?
I would say the majority of people that don't get approved after we have evaluated them are because there's something else that they didn't tell us up front. So being upfront with us and telling us everything, every concern that you have, you know, like for example, I had a call with a client yesterday and she told me, I am 79 years old. I was like, okay, no way. I mean, you're going to get a mortgage for a year. Like, no. So be upfront, tell us all of it, especially if you have, you know, if you own your business, all of the intricacies about it, explain, you know, why your revenue went up or down, and so that we can, well, first of all, evaluate and see, and otherwise just, you know, present the best way possible to present your case the best way possible to the bank. Like this is why preemptively,
right.
You know, because once you do submit and they start seeing like, well, what about this? Well, what about, trust is gone.
Right.
They're like, we're not going to lend money to this person who didn't declare this. And now we're finding out about all these things. Like, no, that's, and that has happened. You know, oh yes, I had this property, and I'm like, well, why didn't you tell me? Like now I kind of have to tell the bank why we didn't, and make sure that you still do qualify. So I would say take advantage of the relationship with the broker and explain your situation, you know, upfront, and that way we can help you get it. And also, you know, if things with one bank don't work, we can always try other things. For example, a lot of people, this is a case with a lot of people that have their own business, they deduct a lot of expenses so that they don't pay a lot of taxes. So in paper, it looks like you don't really make a lot of money,
right.
But you do. And so sometimes we work with banks that actually take a look at your company and use that company like a company guarantee in order to secure that loan, because they can see that this business is actually making a lot of money, but you know, for tax purposes, it's, you know, your income is not that high, but we can make it work. So bringing that up front, you know, can help us guide you and make our plan of how we're going to manage this.
I see. So it's always going to be about being truthful with what they tell you.
Oh, they will find out, and that's what I tell them. They will find out everything. Oh, they're going to look into detail about all these things. Banks have come back to me looking at the credit report saying like, what is this? I thought that this person this, and now I find this. What about this other thing? There's this car here that they didn't declare. Things like that, they will find out.
I see. So it's better to be upfront with you in the beginning,
Yes.
right?
Yes. And also for, you know, in terms of the timing, I've had loans approved very fast, and I have loans approved 3 months later because it's a lot of back and forth. Like, what about this? Send me this. I need more of this. So, you know, if they keep finding out things, they will ask for more. I've had banks ask for divorce settlements and child support paperwork and things like that.
So those are things that you have to disclose.
Yes.
So thank you so much for teaching us about mortgages. Well, at least a part of it, right? Because I know there's a lot more when we finally go through the same process. But I really appreciate you coming down all the way from Mallorca.
Happy to be here.
Yeah, and I hope that this has been helpful. Yes, thank you for the ensaymada. It's very sweet of you. And for everybody who's curious and want to get in touch with Mirelle, how can they find you?
You can find me on Instagram at The Spanish Nest, or also send me a WhatsApp. I'm always checking, and let me know that you found out about me through here. I'd be happy to help you purchase your dream property in Spain.
So we're gonna link your information down here below to anyone who's curious, and please let her know that you saw her video here. And thank you so much again, and we really appreciate your time. We're happy you're here.
Thank you so much.
Thank you, bye.
Bye.